everyone. Today is Tuesday, December 8th, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. However, I do have an announcement, some sad news. This is going to be the last midweek video that we publish. We've been doing these videos for a long time, hundreds of recorded videos over the past years. And this is going to be the last for the midweek. So the market analysis videos on Friday, those are going to continue. We're going to go down to basically one market analysis video a week. It's our in-depth one. It's on Fridays. That's going to continue. And we're doing this for a variety of reasons. I mean, first is at times it can just be slow and sort of the same information on these midweek videos. Occasionally, when the market's moving fast, there are lots of things that change, but and in those cases, maybe we'll do some specials and try and catch up with what the market's doing during those high volatility times. But quite honestly, not a whole lot changes. The midweek videos just aren't as popular. Lots of people tune in for the weekend videos, less so for the midweek, and that's sort of what we're going to do going into the new year. But all is not bad, because we are going to, we do have some other kind of content lineup changes and updates and some new things coming. So it's going to get replaced, and that's about as all I will say for now. I'm still kind of working out the details of what it's going to look like, but we will sort of sunset the midweek video. This will be the last one, and then we'll be doing our Friday on schedule per usual going forward. Nice in-depth analysis there every single week. So that's it. That's what I got for an announcement there. So let's dive into this midweek's numbers so far. It was a strong day. So the uptrend continues. The bull market rages on, essentially seeing movement higher here right across the board. The Russell 2000 was the standout. And if we, kind of zoom in here and we take a look at the 5-day change numbers, you can see that's also the case. The Russell 2000 small cap stocks up 4.5% over the past 5 days. Everything else is green. So Dow, SPY, Qs all up about 1 to 1.5%. But the Russell is clear leader. We are above the 10, the 50, and the 200 SMA right across the board. If we look at sectors here, you can see energy back at the top of the list. It took 1 week off, I think, took a little bit of a breather, and then it just shot right back to the top, 9% over the past 5 days. Biotech in the second slot, and third slot's healthcare. On the downside, utilities, discretionary, real estate, they are in the red, anywhere from just marginally down to 1.12% for utilities over the past 5 days. In terms of major markets, gold seen follow through. That's going to be one of the themes of today's video. We'll talk about that a little bit later on. Oil in the second slot here, 2.5%. Silver, 2.5% as well. On the downside, natural gas getting hammered, 15% lower. LQD and VIX also in the bottom of the underperforming pile. Kind of an interesting mix there, LQD. We do want to keep an eye on that. We don't want to see credit markets start to roll over here into the end of the year. That wouldn't be good, but so far that's kind of the roundup. So let's dive into the charts here. Let's take a look at what's going on. This is TC2000, so our usual equity market grid we have open here. So price itself is the white dashed lines. Our colored dots you see on all of these charts are a custom smart trend filter of ours that we've developed. Measures price and volume, helps us determine trend and trend strength. This is a weekly chart. There's no changes across the board. Looking at all of the major averages, everything is still in a buy signal. Everything's still in an uptrend. You can see we are quite extended here from our smart trend filter in all of these markets. So that is notable. We are, remaining overbought or extended, but that is kind of what we've been dealing with for most of these past couple of weeks. On the daily chart here, it's basically the same thing. You can see uptrends across the board, buy signals across the board. This is not new. This has been persisting. This has been our outlook, our analysis now for some weeks. And it's basically the same old as this market just ticks higher each and every day. So let's jump down to some technical analysis here on a price action basis. and take a look at things a little bit closer. Let's see what board we're looking at here. This one should do good enough. We spoke last week on Friday, and we were kind of settling in, or let's see, Thursday was where we settled in. Friday is where we launched higher here, back to closing at new all-time highs. We traded inside day on Monday, and then we closed once again at new all-time highs on Tuesday. So when we look here at this picture, again, it's kind of just this slow grind higher that we're continuing to see in the market. We've got an all-time closing high as it stands now around over 3,700 for the S&P 500. The nearest sort of level of support underneath this market now, we could sort of reference this 3640 area now. So this was approximately the highs, all-time highs we made back in November the 9th. We hit them again on the 24th. We stumbled across them the next 3 days, and then we broke out above it on the 1st of December. So 3640, let's call it that, with a crayon, is approximately where I think we could kind of trail up some stops and just use some traditional kind of prior support or prior resistance would potentially come support level that we would pay attention to. Below there, we get down to around that 3,600 zone that we talked about for quite some time. So that's kind of what we're looking at here in terms of measuring, mapping risk, where trends take place and transitions happen. I would be looking at those two levels. Of course, on the upside, there's nothing above us, so we are trading at all-time highs. We are free to float, and that's exactly what this market has been doing. So I wouldn't overcomplicate it. Trend is up. We are overbought, but we've been overbought and we are staying overbought. So until and if that changes, that is the trend and path of least resistance. If we go to the Russell 2000 here, you can see back to the races, 1.27% today. Also had a big session on Friday of this past week. And you can see it's, again, closing at all-time highs. We did lose this slope here. So remember, we were kind of marching higher at this rate, this acceleration, if you will, that broke a couple of weeks ago, 2 weeks ago. But, you know, really, it just essentially caused us a slight delay for a few days. And now we're back to the races. So if we look down here, I mean, we have covered a lot of ground. The markets, the Russell 2000 here in particular, has been down, you know, 2 out of the last 20 sessions or 18 sessions or whatever the number is. It's been really, really strong. It is continuing. And seasonally, it's a bullish time. So at some point, this turns. At some point, the complacency gets a little too great and the rug gets pulled and this market can turn on a dime. But again, you know, picking that spot ahead of time is just really uniquely difficult, especially during, you know, kind of the holiday trading time, so to speak. So Russell 2000 closing at all-time highs, getting extended here on multiple time frames. Nasdaq 100 also putting in a very strong, you know, couple of days. Basically, it was only up 0.34% today. It was up 0.57% yesterday. That's good enough for an all-time closing high. Take a look at the consecutive closing sessions here. So we have closed up 10 days in a row now for the Nasdaq 100, basically not letting up. It's trading at all-time highs, 303. This was the prior all-time high we made back in September. That's a relevant level you can use below us if things start to change, if we start to reject in some type of big, abrupt, high volume fashion back below 303, then, you know, that certainly changes the landscape. But again, until and if that happens, the trend is higher and there's no overhead supply above where we are currently trading. We are up 10 days in a row, so you know, let's not get too greedy or chase too much, because eventually this has to settle in and move sideways or pull back. So that's it. That's the landscape. Same thing we talked about Friday, same thing we talked about in our last midweek video and the week before that. Markets are breaking out. We got broad-based participation. The Nasdaq was the latest, but it is in motion here along with small caps. Deadly combination when you basically have everything that is working higher. So that is the landscape there for the major markets. If we go to some some of the other markets we track here, if we take a look at daily chart now of TLT, you can see this is once again kind of flirting back with our trend filter. You can see it's back to its yellow positioning here, which still tells us that we need to be cautious, because when we interpret this yellow reading, we basically fall back or give the precedent to what was the prior signal, which in this case is a down signal, is a sell signal. So sellers still have the benefit of the doubt here, but we are enjoying a little bit of a pop in TLT. We'll see if that can stick. It's been in a tough spot, and we know what the weekly chart looks like. It's been in a sell signal for the past 12 or so weeks. So TLT, that's what's going on there. If we look at metals, I think this is where we have some interesting price action going on here. If we look at the daily chart of gold and silver, you can see we are above our trend filter, so that's constructive, but we haven't got the buy signal yet. We haven't got the all clear signal yet. I suspect that might happen tomorrow or Thursday if we can not just totally roll back over. So let's pay attention to that. I do think it's meaningful. Let's actually just jump right to the price action. So if we look at gold and silver, start with gold. This was in the penalty box ever since it kind of rolled over and lost this range here a few weeks ago. But as we can kind of see, what's happening now is that we have kind of stopped on a dime. We had this little island bottom reversal here, this 2-day reversal. We talked about it on that session. And we had this strong kind of, almost like a bullish piercing weekly bar here in terms of last week's weekly session. And we talked about all of this overhead supply, that it was in kind of a tough spot. This rally last week was great, but we had all of this above us of prior traders that had bought in this zone that would be interested in potentially taking profits as price got back up towards that level. And we're getting follow through this week so far, of course, right? It's only Tuesday, so this weekly bar is going to look a lot different potentially come Friday. But this is a good start to the week. The fact that we're not just rolling right back over here and, turning this into a bear flag that just, totally rolls over, that's constructive. So we'll see how it finishes out the week. If a weekly bar can finish, anything north of 174 or so, I'd say it's a constructive week for the bulls. So let's pay attention to that. Good action so far, and we'll see if that can persist. Silver's basically the same thing. We like silver more because of the technicals, right? This didn't, completely break down. It held on to September's lows. And once again, we put in a weekly engulfing bar last week, and we're getting some initial follow through. So we'll see if that holds until Friday. But again, kind of similar comments. If it can, hold above 22 and 35, 30 or so come Friday, then it's a win there for the bull case. So gold and silver was, something that was definitely meaningful, and I wanted to mention. I think that actually might be all I have. Not a whole lot else to discuss. Everything is kind of, staying the same. Actually, let's take a look at natural gas. I haven't personally looked at natural gas in a while. I know it's been down big. So yeah, you can see here. This is breaking to new lows. So this is not too exciting. With a dollar that's getting smoked and most commodities kind of at least rebounding, or I guess its cousin oil is certainly working. This is making new lows. So that's not so constructive here. It's clearly overstretched and sold on the downside. If it can, if it can get back above the low here from June, you'd have something to maybe trade against if you really want to be kind of counter trend aggressive and look for some type of turning point. If you can get follow through tomorrow, get back over 9, then, maybe you got something there. But this has just been in a real tough spot, and that's kind of the way it's been persisting. That was a weekly chart we were looking at, by the way. This is the daily chart that we were looking at. You can see just, again, a series of gap downs and trading below the June low. So that's it. That is what I got for this week's video. Again, this will be the last of the midweek videos until hopefully we can get some type of replacement up here. We'll still be doing the trade idea videos. We'll still be doing the weekend videos, and that's it for right now for the next few weeks. So as always, thank you so much for tuning in and watching. You can still subscribe to our YouTube channel. It keeps you up to date with all the latest that we're publishing, including some new stuff coming, or check us out at thetraderisk.com. Thanks so much. Have a great day. We'll see you back here tomorrow for some swing trade ideas.